Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 5th, 2025, and we're diving into the latest earnings report from Ocular Therapeutix, a biopharmaceutical company focused on innovative treatments for retinal diseases. Joining us is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. Ocular Therapeutix has been making significant strides in the biopharmaceutical sector, particularly with their AXPAXLI trials for wet AMD. I'm excited to discuss their Q1 2025 results and what they mean for the company's future.
Revenue and profitability overview. Let's start with the financials. Ocular Therapeutix reported a net revenue of $10.7 million for Q1 2025, which is a 27.6% decrease compared to the same quarter last year. John, what are the key factors behind this decline?
The decrease in revenue is primarily due to reduced sales of their Dextenza product, influenced by changes in pricing strategy and buying patterns among distributors and healthcare providers. Despite this, the company is optimistic about future revenue growth as they adjust their sales strategies and clinicians adapt to new payment systems.
And what about their profitability?
Ocular Therapeutix reported a net loss of $64.1 million, with an adjusted EPS of 0.38 cents, missing the forecasted EPS of 29 cents. This loss is largely attributed to increased research and development expenses as they advance their clinical trials for AXPAXLI.
Strategic initiatives and clinical trials. Ocular Therapeutix has been focusing heavily on their AXPAXLI trials for wet AMD. Can you tell us more about these strategic initiatives?
Absolutely. The company is making significant progress with their SOL1 and SOL-R Phase 3 trials. They've received positive feedback from the FDA, which is crucial for their potential NDA submission. Their cash balance of $349.7 million as of March 31, 2025, provides a strong financial foundation to support these initiatives.
How does this position them in the market?
With a robust pipeline and strategic advancements, Ocular Therapeutix is well-positioned to become a leader in the retina treatment space. Their focus on long-term outcomes and sustainable therapies is a key differentiator.
Operational efficiencies and future outlook. Let's talk about their operational efficiencies. How are they managing their expenses?
Ocular Therapeutix has seen an increase in R&D expenses to $42.9 million, reflecting their commitment to advancing clinical trials. Selling and marketing expenses also rose to $14.1 million, driven by pre-commercialization activities for AXPAXLI. Despite these increases, the company is strategically investing in areas that will drive future growth.
What can we expect moving forward?
The company anticipates revenue growth for the remainder of 2025 as they ramp up sales efforts and clinicians adjust to new payment systems. Their strategic focus on clinical advancements and operational efficiencies positions them well for future success.
Key takeaways. In summary, Ocular Therapeutix reported a challenging quarter with a net loss of $64.1 million and an adjusted EPS of 1.38 cents, missing analyst expectations. However, their strategic initiatives and strong cash position provide a solid foundation for future growth. John, any final thoughts?
Ocular Therapeutix is navigating a complex landscape with strategic precision. Their focus on innovative treatments and operational efficiencies is promising for long-term success. Investors should keep an eye on their clinical trial progress and market adaptations.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ocular Therapeutix's performance in the comments below. Until next time.